Welcome back. As promised, we're going to start our Corporate Radar segment this morning. It is on India's digital drive. Now, Happiest Minds, as we know, is an IT services company that derives 97% of its revenues from digital tech versus 40 to 50% for the rest of the sector. Rajiv Shah, who is the president and CEO of the digital business services at Happiest Minds, joins us now to talk about how the business is doing and what is the a trajectory expected over the next many months. Mr. Shah, good morning and thanks for being with us. I just wanted to ask you, what is the potential for your business to scale up the average revenue per client? Because if you look at it right now, the average revenue per client for your own business is about $615,000, which is well below the 3 to 4 million at, say, Mindtree or even L&T Infotech. So some of your peers, it's below that. What is the potential or the opportunity that you have?
So good morning. Thank you for having me. It's a pleasure to be here. Just to take a step back, that we had a fantastic quarter, and I think from the revenue perspective as well as profitability perspective, I think we did quite well. And as the sentiment becomes a lot more positive and customers are revealing their own priorities from digital perspective, and as you rightly pointed out, that 97% of our business comes from digital. Our strategy of landing and expanding in the customer environment is working out well. At the same time, we have 93% of our business, which is a repeat business, right? So we are part of the larger ecosystem of the customer environment where we do product engineering services to digital business services to infrastructure management security services. So pretty much a build, change, integrate, and run. So I think from that perspective, we see a significant momentum. At the same time, as you look at the data itself, that we continue to expand and per customer revenue continues to go up as well. So ability to play in the larger ecosystem, ability to continue to focus on digital, at the same time lending and expanding strategy, I think has worked well, and we'll see its greater and greater growth.
Okay, so you expect the 615,000 to increase substantially. How soon? Next year itself?
Absolutely. And I think that as you see the number of clients that we have, which are $1 million plus to moving into $5 million, etc., is continues to move, and we see quite a bit of momentum in the coming year.
Okay. Let me come to what you told us in the third quarter conference call. You said that US growth is likely to pick up in the fourth quarter and IT budget cycle finalization will be known. Any early trends? Is that indicating a lot more business?
Yeah, so I think that if you look at, there are some factors. One is the emotional side of it, that there is a lot of positivity coming in with vaccine, as well as now people have accepted the new business and alternative model, right? As far as coming over the disruption side of it. Customers have developed a new sets of digital revenue streams to insulate themselves from any operational or any other risk. They have started looking at their approach to the market in a different way compared to what they were earlier looking, be it the personalization, be it into expanding into alternative business model for B2B sectors, to how do you have disintermediation to really improve the customer engagement, in the process becoming more efficient and effective as well. So I think that we see a lot more positivity from that perspective. The customers are looking at their budgets, and based on, of course, we don't give the future or the forward-looking forecast, but we'll continue to grow at twice the industry rate in the coming year as well.
That's a very optimistic expectation, growing at twice the industry rate. But within the digital vertical, I wanted to understand, currently your company has a strength in, say, cloud, SaaS and security within digital, which contributes about 75%. Any new verticals within this segment itself where you see some fresh opportunities coming through for the next 1 to 2 years?
Yeah, so this year we, apart from, so if you look at the digital, we do have a 3 center of expertise. So it's analytics, Internet of Things, IoT. And this year we set up a new one, which is called Digital Process Automation. So as we drive the outcomes in the customer environment, now we look at the process side of it. And what are the things that we can do from automation perspective, whether it's infrastructure automation to application automations to just a pure process automation. So we have set up a new COE under DPA. Along with that, as you know, that we have significant presence in various verticals, edutech to high-tech to media entertainment, retail CPG, etc. And this year, about a quarter ago, we started looking at the healthcare as one of the key critical components of our growth area as well.
Okay. Can you look a little more into the future? We have been doing this digital drive as a series, and we had yesterday some people from think tanks like Redseer, and their expectation is that the Indian B2B business from something like $4 billion is going to increase to $80 billion by 2030. I mean, they see a very fast pace of digitalization. So can you just look at the vision, say 3-4 years down the line? Are you seeing yourself at the start of a multi-year growth cycle?
1 and
absolutely, and I think that we touched upon that. I think people have figured out that there has to be an alternative business model which requires them to look at the business differently. And that is, while we all suffer through pandemic and we all have challenges, but I think it has also added to look at the efficiencies as well as approach to the market, right? And just from the B2B perspective, most of the B2B sellers have moved to remote or digital, and close to 75% compared to what it was earlier. Buyers are willing to spend big using remote and or digital, both in terms of transactions as well as size, and supporting both selling and prospecting. So just from the B2B perspective, it is going, and I think that people have figured out the alternate business model, which is giving them a lot more efficiencies, and that market will continue to grow. Just from the pure B2C perspective, the closing down of physical stores, touch points, the customer engagement, etc., has really created a new wave of doing things. And one of the key areas for us is edutech and how remote learning, remote access, tutoring, etc., has also played a critical role in looking at the education in a different way. And that drives its own set of technology investments, right? So the web and the chat and the access, etc., is driving lot more technology investments. And finally, that comes with its own set of security requirements. How do you access information? So that drives the infrastructure management and security services. So given that the business model has changed, we are in the right space. We continue to look at the entire ecosystem. I think that we see significant, I love your question on 4 years down the road. I think this market will continue to grow and continue to look at significant growth in investments.
Telecom infrastructure provider there. Mr. Shah, sorry, we just had to take that bit of a break because there was, a new listing. But coming back to your business, you've been speaking about hiring as well. What will the trajectory be in terms of hiring? What is the amount that you're looking at, and how would it impact the business?
Yeah, so I think that there are a couple of things that the new way of doing things require significant investments in people capabilities building, at the same time the right set of people that we need to hire. As our strategies continue to be land and expand, at the same time continue to look at the larger ecosystem of digital, I think that we will continue to see a non-linear growth for our people perspective as well. We already reached close to 3,000 people, and that trajectory will continue to grow, keeping in mind that we do quite a bit of work with the customers, and so it will not be a linear 20% plus growth from people perspective, but at the same time, Revenue will continue to grow, and we'll continue to see more and more little bit of non-linear growth from people perspective as well.
Okay, all right. We will leave it at that. Thanks a lot for joining us, and all the best for the quarters to come. That's Happiest Minds. The investors will definitely have happy minds there. The stock is up 65% in the last 3 months itself, and there is a lot of growth expected by the management. Let's do one thing. Let's get back.